Taxes. Dave just had a hard month at work, flipping burgers at his local McDonald's. Long shifts, greasy hands, customers asking for just one more sauce. He's in bed when an email arrives. You've been paid $2,000. Dave opens his banking app. Only $1,456 shows up. He scrolls down the pay stub. Federal income tax, state tax, Social Security, Medicare. This is the modern ritual for Dave. Working, getting paid, and watching a chunk of it disappear into invisible systems that somehow expect gratitude. Here's the deal for Dave. Taxes are the cost of a civilization. He pays, and the government builds roads Dave drives on, funds schools he may or may not have attended, inspects restaurants so his food doesn't poison him, and sends billion-dollar missiles to places Dave has never heard of. Income tax hits what Dave earns. Sales tax hits what Dave spends. Capital gains tax hits what Dave's investments make while he's asleep. Social Security is the government forcing Dave to save for retirement. Medicare is a health insurance tax that supports older or sick people. Then Dave files his taxes. The government already knows what he owes, but makes Dave guess anyway. If he's right, no problem. If he's wrong, penalties. Some people pay quarterly, some yearly, and some don't pay at all and end up in documentaries. Annoying? Yes. But countries with higher taxes often have higher quality of life. Banks. Dave walks into a bank, hands over $1,000, watches the cashier count it, smile, and tell him it's been added to his account. Dave leaves thinking it's sitting in a vault guarded by a dragon. It isn't. Most of it is already gone. Banks aren't safes. They're middlemen. When Dave deposits money, the bank lends most of it to someone else. Someone buying a jet ski, a new kitchen, or a massive truck they definitely don't need. This system is called fractional reserve banking. It works because not everyone withdraws their money at the same time, unless it's 2008, when people did exactly that and everything almost collapsed. Banks make money by lending Dave's money at a higher interest rate than they pay Dave. That's the entire business. Dave uses banks because cards are easier than cash. His money earns some interest, and because in the US deposits are insured up to $250,000. Interest, Dave borrows $1,000 and has to pay back $1,280. Why interest? Interest is money charging rent for existing in someone else's hands. When Dave borrows, interest is the price. When Dave saves or invests, interest is the reward. Simple interest is a flat fee. Compound interest is when the interest itself earns interest. That's how Dave's $12 burrito turns into a $50 regret if he misses payments. But it's also how Dave's investments slowly clone themselves at 7% per year. That's why interest is the silent engine behind both wealth and debt. For Dave, it's either a financial fire or a financial cheat code. Rule: if you're paying interest, kill it fast. If you're earning it, let it sit. Inflation. Dave buys a bag of chips. It looks half empty and costs 30% more than last year. Inflation. His dollar still exists, but it buys less stuff. Less food, less gas, less life. Inflation happens when too many people want the same things, when production gets more expensive, or when people expect prices to rise and rush to buy, or when supply chains break. A little inflation is normal, too much, and Dave's savings melt while wages lag. So governments raise interest rates, loans become expensive, Dave spends less, and the economy cools. Recessions. A recession is when the economy shrinks for at least 6 months. For Dave, things go from normal to layoffs, bad headlines, and falling markets. Companies cut costs. People save instead of spend. Recessions happen because interest rates get too high, borrowing stops, crises hit, wars start, pandemics happen, or because the economic cycle resets. Boom. Peak. Bust. They aren't permanent. They're painful resets. Governments lower rates, send stimulus, or wait. Eventually, spending returns, companies grow again, and Dave buys chips without guilt. Not without scars. But the cycle continues.